Hey traders, what's going on? Jamie Setley here. It is midweek strategy webinar time here with SB Trade Desk, and it is July 25th, 2018. So we had some technological problems last couple of weeks here. Hopefully we have that figured out a bit. I had some updates done on my machine here. So I'm hoping that the quality is better. Let me know that you can hear me and that you can see the screen. And test, test, test. Can you guys hear me? It's all good, says Peter. Great. We'll not spend too much time on the dollar and the dollar index. Of course, we all know we've been trading at the same spot for 6 weeks now. So you've got 1, 2, 3, 4, 5 weekly candles starting in June, where we've got just major wicks and continuing to not break through resistance. So that to me is a a bearish characteristic, if you will, on this chart, right? The fact that we continue to test the same level and are unable to crack it. I'm looking lower. I mean, I've been kind of bearish anyway, right? But the weekly candles here, cart going up through resistance, right? We've documented just a ton, of course, all the sentiment aspects of the situation for some time now, and yeah, I'm not sure what else to say. I'm concentrating, of course, on this short-term chart, right? This is the 4-hour chart, and as much as I am, dollar bearish, if you will, right? Just because it's a thought or whatever, does not mean that we are aggressively, just closing our eyes and selling dollars. Do have a couple trades on right now. I actually was just triggered on the dollar CAD short on that little tariff news pop. Not sure, if that's going to work out or not. Of course, you never know, but it's good setup, right? Coming off the weekly chart reversal a couple weeks ago, and then short term have a nice setup for a break. And if it works, great. If not, we'll look to tighten the risk up if we start to break below today's low. Otherwise, we'll eat the stop and move on. Ty saying, is there some reason you use this dollar index rather than DXY? How do you trade this? Yeah, it's a good question, Ty. So I'll look at both, but so the DXY is, as we know, is mostly Europe, right? In fact, mostly euro. So euro, pound, Swedish krona make up most of that dollar index. So if you're looking at DXY, you're basically just looking at the opposite of the euro, right? Well, I don't really need to do that. I can look at the euro if I want to look at the euro. This dollar index is a quarter each of Australian dollar, euro, British pound, and Japanese yen. So it's the 4 most heavily traded currencies against the US dollar. And it gives me a little more, it gives me, well, one, a different look, right? But it just gives me I think more of a general dollar look, right? Whereas DXY is simply the opposite of the euro. Now, I do look at DXY specifically for the divergences and the non-confirmations, right? So going to that real quick. So DXY, as we know, right, went up to that new high here on, I guess that was Thursday. And see here, euro did not make a new low, right? That is right here is euro, right? So that's exactly what we were looking at last week. It's one of the reasons I like to be, or prefer to be, I guess, long euros and looking for an upside move. But going back to this dollar index here, so Ty, I hope that makes sense. Going back to this dollar index here, going this is the 25 line from the 2011-2014 trend line. It's clearly, something to be reckoned with, right? Support. The huge break back in January wasn't as precise in terms of resistance back here in May, but it was great support here June 25th. And then we actually had support, as we know, on that level on Sunday night. All right, so that's the level that we specified that really needs to give way in order for this move to get going. Right, I'm sure that we'll have a lot to say about this, tomorrow. Right, ECB's tomorrow, and hopefully that gets the market out of this, sleep, this dull trading that we're in with FX. But really, this is the level that needs to break. You break 12.042, and I really don't want to set too much of a target at that point. I just kind of want to let it play out for a while if we do break it, because I think if you break, I think you get an aggressive move lower. I was saying, if you look at the daily chart, this 11,860 area is also where the year open is, or very close to it. Ty says, do most FX shop offer this? Is it a CFD? I believe it's a CFD, but so you can't trade it in the US, obviously, but I believe you can trade it, I think, with Forex Capital Markets with FXCM. But that's, I think, probably the only place that you can trade it, because it's their, it's their index, right? I actually helped develop it when I worked there a long time ago. So anywho, that's what we're looking at. So my focus is on that level, 4-hour chart, 200 period average. You get the picture. It is clearly support. We need to break it if we are going to actually get up and out of here. All right. Until we do, got to respect upside potential, 12,116, even maybe a little higher, 12,124. I believe the 618 of this is 12,122. You get, former high. So, lots of resistance up there potentially for US dollar. So it's one or the other, right? You break, want to be short, or you rally into resistance and be looking for failure in a lower high up in that region. Okay. That is the story with the dollar, and focusing on the short-term chart. All right, euro. Dollar's caught a bid here literally in the last hour or so, right here. So we might be taken out on the stop going into ECB. That's okay with me. The stop is pretty clear cut. Why it is what it is, and you can see that we're looking at the parallels that are based on here. Actually, let me bring the other chart in here real quick. We are looking at the parallels that's based on the original high up here, right? So we've got the February, March trend line, and that's all this stuff's based on. So, the blue line cutting through a lot of pivots, especially recently. So you can see the resistance there on 626. Resistance support here yesterday. So that's why the stop has been moved to 1650. And if we don't hold it, then it's kind of wait and see. And don't forget, not my base case, given everything we've talked about, but this is a pretty darn perfect looking triangle, Elliott wave wise. And, there is the potential for one final breakdown, right? Now, I don't think that is going to happen based on everything that I've talked about with the dollar, but it is still a possibility. So I guess I'm not going to completely dismiss it. And it's also a reason why you always need to use stops, but don't be sitting there thinking that you know what's going to happen and that you're long the euro and it's cool because we're about to rally because we came off big support. Don't want to do that, all right? So the breakout level here is really the 1750 area. Simply you get above this level, and I would treat this as just a base that's been going on since late May, and I would be looking to the top side. And eventually, if we were to break out of this base, you'd be talking about basically up to 120, 170, which would also be kind of the breakdown level from March, right? You're taking the width of the consolidation. If you were to break to the top side, that's where your target would be. Okay, doesn't mean the market's going to get there, but it is a level to target eventually if you do break out through the top side. So again, support on this major resistance. We've looked at this chart 1,000 times, but it's important to remember heading into, ECB, where we are coming off of, right? We are coming off of a massive, massive level. And, don't forget, you can be tricked. We all get tricked. But remember back here, the thinking was that this was an Elliott wave triangle as well, and that it was a fourth, and that we were going to head higher for one more move, where we ended up breaking down, right? So don't assume that just because you can count a triangle, you think it's a triangle, that the market has to resolve in that direction. British pound as well. This is another reason I think to suspect that Ty says width or top to bottom of triangle. So there's a couple different methods to measuring a triangle, Ty. Let's just do this and this. Okay. So one, the way I do it, and I learned this book called Trading and Analysis for the Elliott Wave or Trading for the Trading Professional. So I'm not sure. The Constance Brown is the one who wrote it. It's called something for the Trading Professional. So I'm not exactly sure what it is. But the way I learned it was you take the width, so the widest part of the triangle, which is actually usually what would be considered the B wave, and then you measure from that. You can measure 1618 and the full width, which would be 200, okay? And that's going to get you 120.45 on the 1618 and 120.170 on the 200%. Now, if we were to do that for the bearish scenario, you'd be getting 113 and 111.77, okay? Yes, Ty, exactly. Top to bottom times 1618. And again, I use the B wave part, which is usually the widest part, right? The second wave in the triangle is usually the widest, right? Oftentimes you get that, they call it a irregular triangle or whatever, but it's actually pretty normal because a lot of times that's the widest part of the triangle. So that is how I look at it. British pound, another reason why I think it's best to look on the, eventually at least, the top side for currencies against the dollar, so downside. Ty says, do you measure the breakout from the triangle breakout? So just measure it from I'll measure it from the B wave part. Hold on here. Sorry, these are good questions. Keep them coming. It's I know I'm going through the stuff that I was going to talk about, but this is good because hopefully everybody learns here. Let's see if we can find an example real quick of a triangle breakdown. So this would be a triangle breakdown over here. Okay. So you see this triangle here, right? I'm measuring on from the second leg, which in this case is not the widest, but I use the second leg, right? And measuring that, and that would have given you the target of 109.19. You did go a little lower, 108.50, but you get the idea. And yeah, I'm measuring from the breakout, or from the, the breakout level on the bottom. So most of the times you're measuring just from a flat level. Contracting levels aren't nearly as accurate. So in this case, I'd be measuring from the breakout level. The breakout level on the top side would be considered, for measuring purposes, would be considered 118.41, and measuring purposes for the downside would be considered 115.09. Okay. Ty says, show us where you would get long or short. Well, I'm long euro right now with the stop here, but where I would be long if we were to break to the top side and I was not already long is you'd break out, and then, in this case, you break out, and then this line would end up being support if you came back and tested it. So you break out, come back, test it, and you'd look for support because it was former resistance. Okay. Okay. Let's move on. Got a lot to cover. Where was I? Oh yeah, pound dollar. All right. So cable, we are looking here at a 5-wave rally. Okay. And we've come into the underside of the 27 trend line, which is where we were looking for a pullback. Noted that this morning, and 31.78 is the high. We should continue to pull back here, and I'd be looking for support on this, essentially the blue parallel. You've got a pretty good range in terms of the fibs between 130.42 and 130.67. Also in that vicinity, you've got the June low. You've got this little high up here on 719. So there's a lot down there, right? I'm probably looking at a short at some point today or after today, kind of waiting for the 4-hour bar to close, and that's going to close in 2 hours. Excuse me. And we'll have a nice 4-hour reversal bar here, assuming that we close like this. So then I'd be looking to short. I'll probably put out an order to short like 131.55, 131.60 or something like that, and just be looking for a move down here into support. Okay. You can see the parallels, the blue line parallels, beautiful, lots of support on there. And generally that's where I'd be looking for support, right? So I gave you the range of 30.42 to 30.67, but really this line is kind of where my eyeballs go, where I'm looking for a low in cable at some point over the next day or two. All right, Australian dollar. So all eyes on the channel here that starts back in February, right? It's kind of weird, right? We're starting the channel from kind of an odd place because we didn't draw it from up here. We drew it from over here. Why? Because this is clearly the angle, right? What makes more sense? Trading with this trend line that obviously is, price continues to trade on, or drawing a trend line from up here somewhere and trying to, if I were to draw this, not a whole lot going on there, right? You've got these two touches and these two touches, but after that, not a whole lot going on in the middle. So it's also better, just a general rule, is to have a flatter trend line, work with a flatter trend line, because the breaks are going to be much more important, right? Just as breaking a horizontal level is also more important. And that's just, obviously if you break a really steep trend line, it's not going to make a whole lot of sense in terms of continuation, because at that point, you don't really know if it's a true break or not, or if it's, just a little correction. So The one good thing about this, I guess, is that we've got an obvious level at which when we break, if we break, I think we probably go higher quickly. And that's going to be essentially, I called it 74.50. 74.50 is the horizontal level. You know, it's a level over here, 74.47 if you want to be real specific on it. And you know, if we can get up and out through this slope through 74.50, then I think focus is right on this trend line, or on the trend line from Feb up at 75.30. But you know, until then, really nothing. You know, there's not. It's really forcing it to try to trade this at this point. You know, you've got some good levels like at 73.60 we talked about the other day. Lows over here. It was the high volume level as well from last Thursday. But other than that, you know, I'm not interested in the Australian dollar here. You know, we've got to get through this spot here first. Now, just as we've been talking about sentiment as it pertains to the U.S. dollar, right? Sentiment in Aussie is terrible, right? I think last night I put out a tweet. If you just go to Google here and type in Australian dollar and see what comes up, right? Snakes and ladders, okay. Let's see, short Australian dollar, Australian skyrockets. Where the hell, what are these people watching? Sell the Aussie as worse is yet to come. That's a good one because that's the, you know, the forecasting in it. Blah, 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 crumbles. That's, you know, kind of good word. Bearish view. I mean, you get the idea. Everyone hates the Australian dollar down here. So probably a good idea to like it. But we do need to get a break up and out of, you know, the 74.50 area before it's really worth being long. And even then, you'd be aware of 75.30 as a spot where you could fail. We actually are into bearish seasonals now for the Aussie dollar, but either way, 74.50, that's all you need to know. Also, when I look at Marco saying, would you then fade 74.50? Would I fade it? No, I would not. It's obviously been a resistance level for some time, including last night. But no, if we get back up and back through it again, I'd want to be long. I would consider fading up here, right? We don't know what it's going to look like up there, but that might be a level to fade it. Also, when I look at the Australian dollar, it's always good to look at, you know, maybe, you know, something like another cross, like Euro Aussie, for example. So let's look at this. Euro Aussie, and if I go back to the 2000 and that's a 4-hour chart, we're going to go 2017 low. So we're going to throw on a fork here. And we're going to do what's called a shift fork. Okay. And you see how this, you see how this shift fork, it ends up getting a pretty good channel. A little false break here. You know, you're having support through these levels. So this, to me, gives us something to kind of look at in terms of levels for the Euro Aussie, and somewhat by extension, I guess, the Australian dollar. But essentially, you know, 156, you know, 07 is going to be support that you want to look at in Euro Aussie, right? It's going to be the 200-day average. You get this floor over here from earlier in the year. You know, maybe this is ECB tomorrow, right? Maybe you get a quick dip lower and then move higher. Maybe this says more about Euro in the near term. Point being, though, let's say you do get that, and then you might be looking for the Aussie to come off a little bit, right? If we get up to 75.30. So, you know, to me, I've got Euro Aussie still in an uptrend, a broad uptrend, right? As long as we're within this big fork, and I've got a good support to look at. So this will be one that I think you might want to pay attention to actually tomorrow, okay? All right. Kiwi is quite similar to Aussie in the sense that I don't think there's a whole lot to do here. I'm kind of hoping that we get the dip down to the 67.50s, right? So with Kiwi, you've got kind of a weird trend line because we're going off the February high and March high, and we're kind of like ignoring this part. You went through it. That's okay because it continues to work, right? So same slope, hits the lows, right? Hits resistance over here. You've got kind of an internal trend line or an internal slope line that continues to provide support. You've got a pretty decent looking Elliott wave base in terms of this looks like a 1, and then you've got kind of a 3 wave down, right? Labeling it WXY because, again, this is 3 waves to finish. So it's kind of like, you know, ABC, ABC, ABC. You get the idea. It doesn't really matter how you label it. It's kind of semantics, but from a textbook Elliott perspective, that would be how you would want to do it. And, you know, 1 up, and then kind of consolidating. So if this is something of a flat, right, maybe a little A, B, 1 more drop C is a potential, you know, for a long into the 67.50s. Other, you know, if that doesn't happen and we start to establish up here, then maybe it's a buy up until up here. But I don't really think I'd do anything really with Kiwi unless you get the dip down here for entry. Dollar CAD. So I know there's a lot of stuff going on in this chart. I apologize. But we just got short at 31.30. And nice little reaction. So with dollar CAD, let's remember a couple things here. One, longer term basis. Hold on here, let's open up a workspace. Longer term basis, we actually had a reversal several weeks ago, right? So this was the J spike back here in, back at the last week in June. And since then, we've kind of treaded water, right? Got a down, got an up. You've got this potential for this wedge. And general focus is just down on the top side of the 2017 trend line, which is about 129.30, 129.40, pretty close really to the low from this week right here, which would have been the week that ended 6/15, okay? You've also got the highs over here, 29.20. So basically 29.20 to 29.40 is kind of like a, you know, to me, it looks like a kind of a magnet. So you've got that. And then we've got the short-term picture, okay? So you got, you know, down, a clear 3 up, right? It's actually like Kiwi, right? You've got the 3 up, 3 down, 3 up. And today we've broken a trend line. So all that combines to make for a short, which we just got triggered on. And looking lower, you probably don't even need that. But looking lower towards the 2016-17 trend line, you'd have 2 equal legs at 29.70. I think your support's probably going to be closer, like I said, to this 29.40 area, maybe even 29.20. But bottom line is kind of looking there. Stop is where it is. You know, it's fairly tight, and we are looking for downside continuation on this break. Nice little short-term head and shoulders here on dollar CAD as well. And yeah. Ty says, was this in your swing update? No, it was not. That's why I just sent out the trade via Twitter, right? Sometimes things happen in the middle of the day that may not have been on in the swing update, and you know, it's sometimes that happens. Let's see, where was it? Anyway, hopefully you guys did see the entry for 31.30, but that was 10 pips ago, so it was not that long ago. Dun, 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 dun. Where is it? Swing update. Where? If I could find it. I don't know. Anyway, order was sent out to short at 31.30 this morning on Twitter. So I'm sure you guys saw it. Marco says, have you ever considered using Slack? No, maybe I should. Is that a better thing? We should look in that. Marco says, definitely. Okay, definitively. All right. Okay. Pete says he saw the tweet. So I'm not making it up. I did hit the, Kelly also hit the trade. Okay. So yeah, sometimes, Tide, there are things that go out that might not be in the Twitter updates. That's just how, sometimes it works that way. All right, moving on. So dollar CAD, we went through that. Gold, let's look at gold. Let's go to indices, crude, all that stuff. Do you guys see, by the way, how this tariff stuff like totally doesn't matter? Like volatility is at like the lowest it's been in years, and markets do not care at all. Okay, crude oil. Have we hit a low point for a bit? Maybe. Middle of nowhere for me. I'm looking either at 71 up here. So basically you've got this channel and you've got the center line, which is going to be resistance probably if we get up there at some point. Leon says, or markets care so much no one knows what to do and are paralyzed. That's true. Or it could just be that it's July, right? And everyone's on vacation. Who knows? But yeah, I'm looking for, I was thinking we would get support a little bit lower. Like I was hoping for this spot, which is the Jan high. And this is the March high. And you get the idea. And we're looking for that 66 handle. So we got like 67, I think, and change at one point. But yeah, looking for, that Jan high. This could be a 1-2. This is your 3. This could end up as a 4. Either way, all I'm caring about are the levels here, and that means I'm looking for basically, these parallels, okay, which have been support and resistance pretty, fairly precisely, especially the top one, been hit a lot more as resistance and support. So that means at this point, you actually don't have to go to a new low. You could just come back down here and test these lows. So I'd be looking for that to provide some support at some point, and I'd be looking at the median line to provide some resistance at some point, okay? So you can see it right here, resistance, when you came off of this, right? Resistance, although not precisely, support, support, resistance. So that is it for crude. All right. Going to gold. So we kind of talked about this in Monday's update, but here's the daily chart. We're looking at potentially having a triangle from up here, right? You've got a lot of sloppy price action since the 2016 high. So, my thinking there is that it's all corrective. And one of those options would be a triangle. Okay, kind of that simple. So maybe an A, a B. A lot of times, right, you get the alternating legs to relate by 6, 1, 8. So if that's the case, 618 of wave A is 1209.89, call it 1210. Our low so far is right above there. You know, obviously could have a low in place, we just don't know. We'll have a better kind of feel for that. In my opinion, if you can get kind of up through the 1240 area. So 1240, see the general support before the breakdown that was late last week or midweek last week on Wednesday. And this is just a regular fork actually, and ends up being this trend line. So this is good to work with. You can see that the 75 line support, 25 line resistance. So this is going to be resistance again at 1240. And really, until you get out of this, it's kind of tough to call for a bigger rally in gold. But I'd be looking for a test of 1240, then see what happens. That's also, by the way, the underside of the trend line from 2015 and 2016. So that is important. That 1240 level is key. We will look at silver. Kelly wanted to look at silver, no doubt. Hold on. So here's, this is actually a pretty good look at something that probably have not seen yet, and that is, this is the 1971 to 2001 trend line, okay? If we put those angles, this is log scale, of course. If you're looking at something that's not log scale, looks like that on that long a time frame. So we're looking at log scale, and if we can throw the parallels here, right, from the 1995 high, you get the spike through in 1998, resistance, support to the tick here in 2006, and guess what? That same line was support for the low back in 2015, 2016. So we're getting really close to that. It's going to be like 15.15. It's actually right in line, isn't it, with this low, which, yes, is 15.15. So it's also, by the way, very close to the high from 1983, okay, which is also very close to the high from 2006. So point being, Kelly and all else, if I were me, then I'm putting alerts on these levels right here. Okay, I want to know when we hit 15.15 or whatever. So maybe one more stab on the downside at some point. Kind of makes sense when we just said that the gold chart is going to face a big level at 1240. So it's not, not necessarily out of the woods just yet there. That's where I'm looking. Let's make that big and fat. I mean, that's pretty clean, right? Amazing what you can get when you look at these really long-term charts, actually. So that's 16 degrees. That is, we gotta make sure that's 16 degrees. That is 16, hold on. Okay, there you go. So when you're doing these charts like this on TradingView, right? You're doing it on log scale. You've got to, it's important, this is important, you've got to look at the angle, right? So if you're using TradingView, you can click show angle, because you can't do a parallel like on a long-term chart and drag it on log because it changes. It's all wonky. So go there, do the angle, make sure that it's the same 16 degrees, 16 degrees, 16 degrees. Okay, and then you can zoom in and you see your beautiful stuff here. All right, so that $15 mark might need to be hit. If it is in silver, then I would say that let's look at loading up the boat. All righty, where are we at here? Let's look at some indices, I guess. US indices are just the worst right now, aren't they? So I actually, you know what? So instead, I want to look at, because I've got a pretty good chart made up. Roxy, looking at, got a good question here. Ty says, wants the picture for the silver. Sure, here you go, man. Ty, you tell me when you're done getting that picture, and I will, so I can change it up. You good? Okay, good. All right. Roxy, I see your question, and let me go over that after I show what I wanted to show here with the ETF, with the spider. All right, so two things here on SPY, okay? I can look at this on linear scale, which is this, and you can see that resistance within the channel. First of all, the channel is great, right? It's beautiful channel. You can see that we are looking at potential for kind of resistance up on, I would say, this line here, okay? So the parallel which crosses, that's December 2016, that's June 2017, that is November 2017, and that is June of 2018, right? So that is like 283.30s or something, all right? That would be a level to pay attention to, in my opinion, if we got up to that point. So are we going to get there? I don't know if we're going to get there, but that's the point to pay attention to if we get there. Just kind of anecdotally, like how the market is trading right now. You've got all this supposedly bearish news happening, right? Market does not care at all. So, the whole like, well, market that won't go down on bad news is bullish thing. I get it. Says maybe we do get up to that point, but then I'd be looking for a pullback. But I would be looking for support at that point on the center line. I mean, it was support all the way throughout 2017 for the most part. Now, here's the other thing on this, right? I mentioned yesterday. Yesterday kind of felt like June or July of 2017 last year. So last year we had a top on July 27th, right? It was more pronounced than NASDAQ, and you had a pretty big pullback. And the NASDAQ and S&P pulled back a bit, and the Dow actually went up. Kind of felt like that yesterday, right? So here's what I'm getting at on this. If I throw the parallel on across that July high, and then I take the parallel and I put it back on the lows that you made last August, that also gives us some levels to look at. So let's move forward now with that, okay? So with that, we're already on it, okay? So we're kind of there. We're kind of here, 282 to 283.50 or 283.30 for something on the downside on the S&P, and that gets you a zone for support at about 276.50, okay, which is the low from 7-11. And then the really important level, in my opinion, is actually going to be 274. Right now, if you're looking at this from S&P levels, that's going to be basically 27.65 and 27.40. Okay, it's just that this is a really clean chart, so I wanted to share it rather than looking at the SPX 500s. That this is a clean chart. Sometimes you get, I think you actually get better trend lines, better angles when you're trading with or looking at SPY because it's only the U.S. session, so you don't get the overnight spikes, right? Obviously, the U.S. session is going to be the most important one when it comes to the U.S. markets, right? Just like the European session is going to be the most important one when it comes to European markets and vice versa, okay? So on and so on. So this is where my head's at here, looking for something on the downside from either here or maybe 283.50, and would be looking again at these as big supports at some point, either towards the end of the month or sometime in early August, okay? All right, now Roxy had a question about the NASDAQ. Okay, on the weekly chart. All right, so large 1-2 until September 2002. September until November 2000. Okay, hold on here. This is going even longer term than I go sometimes. All right. So one way to help do this, if you're, this is true for any time frame, but if you throw on a, so first of all, let's start from here, okay? It helps to count, so this is monthly, so because we're looking like really long term here. So let's go monthly and we will go, yeah, I see what you're saying, like this 1, 2, okay? It helps to count the waves on momentum, or in this case, RSI, which is obviously just a momentum type indicator. And we are looking at this as obviously you've got a big, a big move up in 1 and a big move down in 2, okay? From that point, you've got another move up in 1, but that subdivides into, I would say, kind of a 1, 2, 3, 4, 5. So you can count 5 waves up in momentum, okay? I don't like to worry too much about the long-term wave counts. I'm looking more for the levels. 1, 2, and then massive 3. So if you're talking about November 2008, so right here, and then how do you count that from there? subdivide, and how's this a, a 3, as you say? So this is probably the end of most of 3 of 3, right? Because this was the momentum extreme, which is oftentimes associated with the third of a third wave. And again, from there we can count, or from 2008 we can count, or 2009 I guess, we can actually count the 5 up in momentum, okay? This is the channeling technique we've talked about a lot, right? So take this and then add the width of this channel, half the channel, we call it half channel extension, and then the full channel extension, okay, is going to get you this line up here. Well, the half channel extension was pretty damn good resistance, wasn't it? We'd expect the full channel extension to also be resistance if and when we get there. And that's going to be about 81.90 or something like that, okay? So it's really not very far away. We are currently 78.68, so we're talking 81.90, 82, 78.50. So 350 over 7,800, not even, I don't know, was that 4%? Something like that. So talking maybe 4% upside until we get to that level. Question here from Ty saying, do you think we're in a third of a third on it? Yes, I mean, I guess this, yes, is the answer. I mean, the momentum was the most extreme we had since back here in 1996, okay? So that also actually was at almost as high as back in the tech bubble. But yes, this would be the momentum classification of a third of third wave. You have a FIP extension up here at 80.26. Another way we want to see how this channels. Oop. Whoa, it's a lot up there, isn't it? So Ty is saying, does it project a bull for years to come? It may, because being in the third of a third, as we say, right? You'd be looking for a pretty sharp drop in a fourth wave and then move higher. You know, all I'm looking for though, like, so on the monthly RSI, look for, because, you know, look, there's so many different wave interpretations. We get it. Like, we were in a third wave in the NASDAQ, you know, we've been in a third wave in the NASDAQ, you know, equity markets generally. But what you want to look for is for RSI to correct, and probably to correct down into the 60 area, which, you know, when you get this overbought on a monthly chart, right, those moves back down into 60 should be, you know, enough to moderate the momentum in order to get additional upside. So Roxy says a potential wave 4 of the whole move from the 09 lows coming soon. Yes, that is my thinking, Roxy, exactly. That's exactly where my head's at on that, right? So if let's try to channel this on, all right, so here is, let me look at the, I don't want to look at the futures. I want to look at the NASDAQ composite. Here, yeah, here we go. All right, let's go here. All right, we're going to go on a weekly chart. Okay, that's 24. Pretty good, right? So weekly chart, we got 1, 2, first count with me. We're not going to go all the, we're going to go 1, 2, 3. By the counting rules, that would not be it. So you'd have 1, 2, 3, 4, 5, 6, 7, 8, and this is 9. Okay, so that makes this 1, 2, and then this is 1, 2, 3, 4, 5, 3, 4, 5. Okay, and this does project that we get our high probably somewhere on this line, although we did not quite get there, did we, back in January or March for that matter. So, you know, let's see, what is that? So that gets you 80.40 to 81.30. I mean, we're close, right? That's all I'll say. So, Roxy, does that help a little bit? With the RSI, maybe I probably need to explain this at some point a little bit better, but you know, with the RSI, what you're counting is the new highs. So this would be qualify as a 1, right? And all of this qualifies as a 2 in RSI because it's 3 waves down in the momentum, you're going to a new low, right? And then RSI, you count this as a 1, this is a 2 because it's 3 waves down in momentum. This is a 3, and that's a 3 of 3 into your momentum extreme, right? And this can all be considered corrective territory here in the momentum, okay? And then from here, you've got a 5, 1, 2, 3, 4, 5. That's your next wave, and then you got a 3 wave down in momentum. All right, and now you're going in your next leg up. So this to me is probably about done. We are, you know, we've got massive, massive, massive divergence on the weekly charts, and yeah, that's where I'm at. All right, I've got to run. I hope you guys enjoyed the webinar, and Roxy, thank you for your questions. Ty, thank you for your questions. I will get this archived ASAP, and I hope everyone has a great rest of your week. As always, thank you for your time, and good luck out there, and I'll talk to you guys later. All right.